Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Ross, today we're going to try to do something that we have yet to do on All That Matters. We are going to attempt to create a video that will last for years. We are going to try to tackle the national debt question. It's a question we frequently get as strategists. It's a question our clients are concerned about, the world is concerned about. Our goal here is to create a video, hopefully 10 to 15 minutes in length, that you can watch 10 years from now and that our children can watch 30 years from now, that attempts to kind of unpack the national debt. And does it really matter? How does it matter? Why does it not matter? Ross, we got to step back in time, though. I have to set the stage so we can get our viewers on the same page here. The national debt has grown throughout the history of the United States. You can look back to Alexander Hamilton for the start of it, but let me give you a couple road stops along the way. In 1835, President Andrew Jackson, who you know is on the $20 bill, he was so against the national debt, he hated debt. He ran on a platform. He's like, I hate debt. He sold some land out west, vetoed every spending bill he could, including national highways. He's like, I don't want national highways. No, I'm vetoing every spending bill. And he paid down the national debt, paid it down. It was gone. And right after that, we had a recession and a horrible depression. And basically, it took about 6 years for the economy to grow again. So it was a disaster. At the end of World War II, President Truman's advisors came to him and said, we face another Great Depression due to levels of the national debt post-World War II. Another Great Depression. Did that happen? No. In fact, by the 1980s, the debt to GDP was about 50%. It had fallen in half. So when I was born, the national debt, 1973, when I was born, the national debt about $458 billion. When Ross was born in 1991, which just blows my mind, it was $3.6 billion. Ross, we just heard a little history lesson. Why do we get questions about the national debt? So why is national debt always talked about?
Yeah, it's a great question. I think there's throughout history a connotation with debt that is inherently negative. You know, it's not viewed as a tool, right? Borrowing to buy something or to do something useful with that money. It's viewed as a burden, right? We think about consumer debt. We think about student loan debt. We think about companies taking on debt. You know, this idea that indebtedness is a negative and is something to kind of shy away from. You know, there are some popular people in our space who are entirely devoted to the idea that you should pay down all your debt and you should have no debt ever. Debt is a tool, but I do think that primarily people think of the national debt. They're superimposing their views on personal debt onto the government. And if I could say one thing that I want people to take away from me throughout this, it is that thinking about a personal balance sheet and personal debt is not comparable to a government and government debt, especially a government like the United States that's issuing debt in a currency they also print. Outside of the debt ceiling chicanery, which is entirely self-imposed, you know, we cannot go bankrupt or default on debt that is issued in a currency we print. There are other issues. Think about interest rates, inflation. And this is a point that a guy named Cullen Roche has made, and I think is worth reading for people. But the number one thing is people superimpose their negative connotations of personal debt onto a government entity that just operates in a completely different stratosphere from how we manage our own personal finances. I mean, is that right? What do you think?
Yeah, I think that it's a political football that gets tossed around. It's used as a scare tactic by both parties. It happens all the time. And then you're right. I think that people hear the word debt, they think about themselves. They think about, I borrowed something and maybe that was scary. They think about, is that scary for the United States? I want to just emphasize this point. I'm going to end on this point too. I found 3 cool cartoons that I want to share with you to emphasize just how often we talk about this. So you'll see on your screen here, the first cartoon's from 1937. It was worries about the national debt. The next cartoon you'll see on your screen is from 1988, and you'll see that it is worries about the national debt. And then you'll see 2 more side by side, one from 2009, one from 2019, all worried about the national debt. My friend Morgan Housel, friend of the show, wrote a book called Same as Ever recently. It's 2024. I just, in my intro, talked to you about worries about the national debt from the 1800s, the 1900s, and the 2000s. So this will happen forever. This concern will be with us forever. That's why we're trying to do this, to address it. So let's move on to part 2, Ross, and talk about why does national debt exist? How does it grow? How does it shrink? And then maybe you can talk to us a little bit about, are we bankrupt? But first, I want people to just be on the same page with us in terms of the economy of the United States is what's called a credit-based economy, which means there are assets and liabilities. Just think of a balance sheet, okay? In order for the balance sheet to grow, both sides have to grow, right? Both assets and liabilities. When we issue debt, we're issuing liabilities, but that's an asset for somebody else. So if we want the economy to grow, we need both sides to grow. There's only two entities in our economy that can borrow significantly, the private sector and the public sector. So if you want the debt to go down, you want the public sector to start saving and paying down the debt, that means you need the private sector to start levering up to keep the economy from shrinking. Ross, do we really want the private sector, which is prone to crises, levering up so the public entity can save?
I don't think so. I think when you frame it like that and offer people kind of a choice of one of two things, they would say no, because we know that private sector getting over levered has led to some of the most prominent and well thought about financial crises in history. 2008 comes to mind. That was just a classic way over levered sector.
Yep.
And as much as we take questions about the national debt, I seem to get just as many questions about, are consumers tapped out? Are they over borrowing? And so no, I would say that the same people who are worried about the national debt are equally worried about private debt. And if you gave me the choice, it would almost certainly be, I'd rather the government be borrowing and the private sector able to better manage their personal balance sheets.
So Ross, is our nation bankrupt? I wrote a blog called "What is the Net Worth of the United States?" It's from 2021. We can link it in the show, or we can get it to you. In it, I talked a little bit about what are our assets and our liabilities. Let's say the national debt's 33 trillion, Ross, and let's say we have 300 trillion in Social Security and unfunded Medicare and all these things. Let's just make it 400 trillion. All right, the United States owes 400 trillion. That number seems crazy. Let's say we owe that. What are our assets? Remember, if we have debt, we also have assets. I said we have land, we have natural resources in the ground, above the ground. We also, Ross, the United States government, and this is important, has the ability to tax the most productive private sector in the history of the world. They have that ability into perpetuity, forever. Okay, and you have to pay your taxes in dollars. That's crucial. That, Ross, give me a value on the ability to tax a $32 trillion economy into perpetuity. Is that 500 trillion?
I don't remember my grade school math, but it's the one above T. It's quadrillion, whatever it might be. It's unquantifiable in a positive way, right? Because as you mentioned, the government has the ability to tax in the currency they pay interest on the debt on.
Yeah.
The most productive economy in the world, the biggest, the one that is
ever,
the biggest stock market in the world, some of the biggest and most productive private companies in the world. Those all fall under the umbrella of the United States. And, we have the biggest military in the world. We have the ability to tax those sectors. We have raw materials under the ground. We're pumping oil at a record pace.
Yep.
So it's not that, it's not that it's just the debt. It's that whenever these debt headlines come up, I think Barry Ritholtz or someone else came up with the term denominator blindness. You have to have something to compare it to. Consumer debt, you have to compare it to income. You can't just say, we have this X amount of debt. The national debt is the same way. And the assets of the United States, to me, borderline unquantifiable. And it's not that there don't need to be things done on the margins to get, the budget deficit under control. We're not saying don't worry about it at all. We're not trying to tell you how to feel. But as far as thinking about it from an investor and market-based perspective, that context is so critical. So I'm glad you brought it up.
The United States is incredibly wealthy. We are the wealthiest nation in history. Don't think of us as bankrupt. We are not bankrupt by any stretch of the imagination. So, one thing that Ross just mentioned, we're not trying to hand wave this and say it's no big deal, just forget it. This video is just like, nothing's big. What we care about is how fast the national debt grows and can we service the debt? Those are the two most crucial aspects to the whole thing. Remember I said that President Truman's advisors were worried about the national debt and that by the 1980s, it had basically fallen to about half of what it was. It had fallen dramatically. What happened? Did we pay it back from post-World War II in 1980? No. The economy outgrew those levels of debt. That's what happened. So we are at high levels of debt now. If the economy continues to grow, we can outgrow these levels of debt. It will take a long time, but it also took a long time back then. So what we really do care about is how fast is it growing? And both parties do need to address something of that magnitude, right? It will always grow. Just get that into your kind of mindset now. It will always grow. It has always grown in history. It will always grow. How fast it grows, can we service the debt? And Ross, both of those, we can service the debt, right?
We can service the debt. Interest costs are going up, but they're still well below just the amount we bring in tax revenue, right? So just the amount coming in, there's multiples more than how much goes out to service the national debt. So still very much in check. I think it's somewhere in the teens as a percentage. Yeah. But you're right. Look, it's more of a political issue, right? It's like both parties have ideas about how they want to address the national debt. how the election goes might in perpetuity, actually, the combination.
Yeah, every election.
Congress and White House will have their own ideas on how to manage it. And at different times throughout history, something like a ratings downgrade from one of the ratings agencies, or a bond market sell-off. There are always other forces that can kind of keep this in check. And so it's not that there aren't things that need to be done to get it into a more manageable place. But as far as investing, as far as our clients' money, as you mentioned, the national debt has been a worry for 200 years. It's been a worry for the last 50 years. As it has grown, the economic growth has also been tremendous. Stock market growth has also been tremendous. Corporate earnings growth has also been tremendous over all of those time periods. So is the national debt inhibiting any of the things that we actually care about? And the answer is no, and not yet. And there's no like switch that gets flipped to where it does. So if you look at the course of history as you laid out, it's not been something that investors need to worry about. And if investors had, they would have missed tremendous gains in economic growth and stock market performance.
So, dear viewer, if Ross and I could take you and plop you to my birth year, 1973, and you know the national debt's going to go from 450 billion all the way up to 33 trillion, would you invest in the stock market knowing what the outcome was of the economy and the stock? How about if we plop you in 1991, where Ross was born, and said it's going to go from 3 trillion up to 33 trillion? Do you want to invest? Of course you would, knowing what you know now. You knew that the economy grew, the debt grew, corporate profits grew. That's what you're focused on. And as we kind of wrap up here, I want to put into perspective just how you should think about this going forward. And here's what I think is the best path for you to take. There are a spectrum of worries you have in your life, whether it's, think about just your own personal self, health and car accidents and airplanes, and you have a spectrum of worries, right? And they're ranked. They're ranked. It's the same thing for you and your money. There's a spectrum of worries you have to consider. If I were to say there's 500 worries that can impact your money and your ability to save for retirement, all these things, I'd put the national debt at like number 400, maybe like 405. Okay, Ross, here's the top 3 in my mind. Maybe you can tell me what your take is on this. Number 1 is your savings and spending. What are you saving? What are you spending? That's number 1. Number 2 is probably, what are interest rates doing? What's the Federal Reserve doing, right? What is happening in that respect? Because interest rates matter, and what the Federal Reserve does matters to the economy and the stock market. And number 3 is probably like, how good are you at planning, like tax planning and estate planning and charitable, all the stuff we do really well here at Baird. How good are you at that? Those are the top 3 in my mind. Right, Ross?
Yeah, 100%. There's a tier above everything else, and that is things that are directly in your control: saving, spending, planning. Those are number 1 through 100. Then there's a tier, and I think you're right. Interest rates matter. The cost of money matters. Watch the Federal Reserve and inflation. And then I think I would add corporate earnings, right? We invest in companies. We're part owners of those companies, and we want earnings to grow. Are those companies growing earnings? Are they being productive with their capital? And that, like, to me, is another way that I like to think about the national debt is these companies that we're invested in, whose earnings drive stock prices over long periods of time. Do they care about the national debt? Does, one of these mega cap tech companies who's, investing in AI and the next wave of technology and consumer products, do they think about the national debt in their high level meetings, in their C-suite? Maybe some of them, but I would bet the broad answer is no. And so the people who invest in those companies and are part owners should probably follow suit and think more about interest rates, inflation, earnings.
Yeah. Do you think Howard Schultz was like, I'm not starting Starbucks because the national debt is 14 trillion. I'm not doing it. I'm out. I'm not creating this coffee company. Of course not. He's doing whatever he can to create products and value for the not only for himself and his shareholders, but for the country and the economy as a whole. So let me just wrap up with this, Ross, then give us your final words. We have different backgrounds. I spent a lot of my career talking to institutional clients, people who managed pensions and hedge funds and trillions of dollars. And I sat in all sorts of meetings with them about what they were worried about, right? They're managing all this money. I'm like, what are you worried about? In the 12 plus year career that I did that before I came to private wealth, I never had a single client say, I'm worried about the national debt of the United States. It literally never came up. Not once. Of the smartest money managers on the planet, that never once came up. So because in their spectrum of worries, it's about earnings and it's about guidance and how's the economy doing. Just try to put things in perspective when you're worried. And I know worry is a big part of your life. Just try to put things in perspective. And hopefully, if you're worried about the national debt, you can watch this video. Ross, any kind of final thoughts?
No, I think your perspective on your experience is great. I can just say I have a 2-year-old. She has a 529. So I'm investing as long-term as possible to set her up for success. And we're invested in stocks and bonds and US centric. We're, if I were worried about the national debt, I would put my money where my mouth was. And she's invested for the long term in US centric portfolios. So, I think that's right. There are a spectrum of worries, and it's near the bottom.
Well, we hope we got something out of this video. If you have any questions, you can reach out to us directly. Your advisor, if you want to, we're both on socials, LinkedIn, Twitter, all those things. So if you have any more concerns, you want to make any comments, let us know. We do appreciate you spending 15 minutes with us today, and look forward to our next video, which I think we're going to do something on the election. So stay tuned. Thanks so much.
Thanks for watching All That Matters. Opinions expressed in this episode belonged solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.